Hi, welcome to Forex in 4. I'm Mike Conlon for FX EDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is March 18th, 2010. This morning we're talking about something called Germany. Now you may ask yourself, what is Germany? Well, this is the new word du jour running around the financial markets. Basically, it's sort of like Chindia, if you're familiar with that one. It was a combination of China and India. This one's Germany. It's a combination of China and Germany. Well, what do those two countries have in common, you may be asking yourself? Well, here's what it is. Both China and Germany are number 1 and number 2, okay, in manufactured goods exporting. Okay, so that's what they have in common, and right now, as you'd expect, they currently have economic surpluses as a result. Okay, so basically, because they're the largest exporters, they send out a lot more stuff than they take in, therefore they have current account surpluses. Now, you know, this puts them in a decent financial position because now, you know, countries that are dealing with deficits are having problems, and, you know, they can sit there and sort of point the finger and say, hey, you know, look at us, we don't have this problem. So it should come as no surprise that Germany, not Germany, but Germany is really the obstacle right now in this whole Greek situation going on over in Euro. Now, they thought that they had a bailout plan worked out. Well, now Germany's coming out and saying, whoa, wait a second, because we're going to be the ones bailing Greece out, most probably, we think they should go to the IMF if they have problems with money. Or, you know, they're saying, and going forward in the future, we should be able to kick people out of the Euro if they don't live up to, you know, the stipulations that are required to be in the Euro. So it's really kind of an interesting story because, you know, whether rightly or wrongly, you know, they feel like they're in a position of strength, so they should be dictating terms. We see the same thing with China. Okay, China's kept their currency pegged to the U.S. dollar. As a result, their exports have been cheap in relative terms. Therefore, they've been allowed to accumulate this huge surplus. You know, it is currency manipulation, but politicians are too afraid to kind of say that. And you know, this has gone on for so long that we're sort of in a point where, oops, what are we going to do about it? Well, it's going to be interesting to see what happens with this situation. But both Germany and China are allowed to benefit for different reasons, and because they're net exporters, not importers, they currently hold account surpluses. So, you know, with this problems going on in Euro, that you know, means we have a little bit of mild risk aversion today, and we just take a look at some of these things. Euro's down a little bit. Here we are on the chart. As you can see, I don't know if anybody uses technical analysis, but the Bollinger Band is what I'm looking at here, and it looks like we're just going to maybe trade in a tight range here for the next couple of sessions coming up. You know, as it goes back and forth between risk taking and risk aversion. Some of the other news out there, you know, Aussie's down, Kiwi's higher. I wasn't quite certain why the Kiwi is higher. Let's just take a quick look at that. There's a nice little move up on the daily chart there. They came out with consumer confidence figures. I wasn't able to get a good reading on it, so I'm not sure exactly what's happening, but it looks like that was positive over there. So sometimes, you know, you don't really need to know the news, just know that something decent's happening there. So Kiwi's higher this morning. We'll talk about the pound. The pound is a little bit lower today. They came out with their budget deficit numbers for February. Those were pretty good, but they also said that mortgage applications were lower. So and mortgage approvals rather were lower, so that was a little bit disappointing because that means that they're having some problems with the housing market, and of course that means the political rhetoric is starting to heat up versus you know, talking about this hung parliament that people are afraid of going forward. In the U.S., let's take a quick look here at USDJPY. The CPI numbers came out. They were lower. I mentioned this the other day. It looks like deflation's winning the battle here in the U.S., so this is basically buying Bernanke time to keep rates low, which is going to keep the dollar low, which means, you know, even in light of risk-taking, or excuse me, risk aversion, you know, we could see people start doing some risk-taking because they need to find a place to park their money somewhere. So that's what's going on with the U.S. dollar. And And then, of course, in Japan, they're saying that this move they took yesterday, well, it may not do much more than placate the government. They've got a serious deflation problem over there. As I mentioned yesterday when I was talking about the velocity of money, if it's one thing to expand the monetary base and say, hey, we have all this money out there to loan, but if the banks don't lend it, if people don't want to take it, then it doesn't really do much as far as stimulating the economy. So that's what's happening in Japan. So keep an eye on this new Germany word that we're talking about to really see what's going on, because they're at a point now where they feel pretty good about themselves because of their economic situation. So rightly or wrongly, they feel like they can dictate economic policy. Whether or not this is allowed to continue this way, there's a lot of stuff coming out of Washington now, especially about China, potentially being labeled a currency manipulator, that they should allow their currency to float. So there's a lot happening right now. We have to see what happens. But either way, know that this situation in Greece and what's going on with the China peg are going to be two major themes regarding economic recovery going forward. So good trade into all today. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.